You want to just tell me when?
Next, we have Lon Shaver, Vice President from Silvercorp Metals. Please, go ahead.
Great. Thanks, everyone. Good morning. Thanks for joining for the update on Silvercorp. Today's a special presentation for me because it's the first time in terms of a public audience to talk about something new for the company. I think we've had this slide up talking about being a profitable silver producer and position to grow. And just recently, we've announced a big transaction which really speaks to the growth part. So happy to get into that with you today. Of course, before I do that, the lawyers always require us to put the slide up and speak about the fact that I will be making forward-looking statements today. And I do like to begin my presentation with a look at this slide because it's an important snapshot in terms of what Silvercorp represents. Really very simply, and the easiest part to look at is understanding that as of June, we had $200 million in cash on the balance sheet. This cash has really been acquired the old-fashioned way through operating a business and making profits. We have no debt, haven't done a financing since 2010. We do pay a modest dividend. I'd say that's a symbol for shareholders to understand that as a company, we really believe in ensuring that shareholders are getting a return and benefiting from the profits of the business. But the accumulation of this cash really has been looking at it from the standpoint of growth and what can we do in terms of an acquisition, buying something, building something to add to our mining assets. Next up in the value stack is the blue bar. This is a value of mining equities. So we have positions in various public and private companies where we think there is great potential for growth and value creation. As of June, that was worth $120 million. The New Pacific position, that's another public company that is operating in Bolivia with 3 exciting projects, is the bulk of that investment, worth just over $100 million, and where we've made 3 times our money. As I'll speak to later in this presentation, there's been a number of great catalysts, some more catalysts to come, and we're a very happy and supportive shareholder. Last but not least, turning to our mining assets, if you take our recent market cap and if you make the assumption that the market would attribute full value to the cash on the balance sheet and that investment portfolio, on a look-through basis, our mining assets are trading at an implied EV just over $100 million. This is a ridiculously low number, given that the average consensus NAV from the analysts is over $600 million. And these mines have been consistently profitable. And in fact, our trailing 12-month operating cash flow was $74 million. And we produced silver in the last quarter at $9.46 US an ounce on an all-in sustaining basis if you take our byproducts as a credit. We have a plan for growth for these assets, and I'll touch on that a bit later, growing from 6.6 million ounces in the year that ended this past March, seeing it grow to 8 by fiscal 2026. And we wouldn't be where we are if we didn't have a solid relationship with the community and all the levels of government where we operate. So just a quick recap where we're operating. Our operations are in China. The Ying Mining District is the largest, and it's the flagship producer. And it comprises 7 individual mines that deliver ore to 2 milling facilities. Our second and smaller operation is the GC mine in the south in Guangdong province. It began production in 2014. Both these operations deliver lead concentrates containing our silver to smelters within China and zinc concentrates. Last, we do have a BYP. That's another mine that's on care and maintenance, and we're looking to get the permit to reopen that as a gold operation. But all told, the mines have produced over 90 million ounces of silver since production began, over 1.3 billion pounds of lead and zinc. And from a mine life standpoint, despite having been in production for 17 plus years, we still have a 15-year mine life remaining on an average basis, based just on reserves. Operations are in China, definitely has some advantages with respect to dealing with the smelters. So we have low working capital requirements, and that's very helpful. Similarly, close to suppliers for all the goods and services that mining companies use, so we definitely benefit from that. We benefit from a disciplined and capable workforce, and the regulations that have applied to us operating here have been stable really since the beginning of the mine's operations. A free market for who we sell our concentrates to, And just like any other Western company with manufacturing facilities in China, free profit distribution back to the corporate head office. It's the asset quality which is what has delivered our industry-leading margins. You can see our EBITDA margin on a trailing 12-month basis was 40%. That's roughly double the peer average, pretty much in line with the GDX. But if you think of us as an industrial company and look at a broad basket of industrials, our EBITDA margin far exceeds that. And if you work your way down the income statement, looking at return on equity, that 7.6%, again, far exceeds the peer group average. And I would note, if you remember back that first slide with the cash and the investment portfolio, neither of those are contributing to this calculation. So if you back that out of the math here, this return on equity would be substantially higher. Asset quality is what's allowed us to deliver this very consistent positive adjusted net income on a quarterly basis, and similarly generate those free cash flows. I'll highlight that from a seasonality standpoint, calendar Q1 or our fiscal fourth quarter is the period during which there's a Chinese New Year. So pretty much across the country, our operations are shut for a 2-week time period. So that's why the numbers are always a little softer in that quarter. And going back to Q1 of 2020, you can see that abnormality in the net income. That was the period when everything in China was shut for a full 6 weeks due to COVID. Nice to highlight that since that period, we haven't had any impacts from COVID at our operations. Despite that asset quality, we find ourselves looking at very compressed valuation multiples compared to our peer group, really at the low end of the EV to EBITDA, price to earnings, and price to cash flow on pretty much every metric. But we certainly think that this is a case of the market looking forward to and anticipating, what's next. Other than the organic growth, I think market is waiting to see what we would do with that cash, and we're pleased now to have an answer for that. So what we've announced is a transaction to acquire an ASX-listed company called Orecorp, and that was announced at the beginning of August. It's an accretive transaction on an NAV basis, and the real attraction is what we've picked up here is a basically de-risked, permitted, ready-to-go gold project that will deliver significant gold ounces over a long life and add meaningfully to our financial results. It provides immediate geographic metal diversification. The resource base that we're adding is significant based on the size of the resource and the scale, and what we're looking to do here is move ahead quickly and develop this asset. So where is it? So Nyanzaga is in the Lake Victoria area in Tanzania. It's basically surrounded by other mining operations. Barrick has 2 here, North Mara and Bulyanhulu. You can see significant ounces at those. AngloGold Ashanti's Geita mine there is to the west, but from a resource standpoint, Nyanzaga adds 3.3 million ounces of gold in an operation, again, in an area with great infrastructure, power, road access, and a very capable workforce. Orecorp put out a feasibility study just over a year ago. You can see from a mine life just under 11 years, looking at a total of 2.5 million ounces produced. You can see average annual production, 234,000 ounces. So this is a significant asset. Low cash cost and all-in sustaining, with the latter coming in under $1,000 US an ounce. And you can see from the economic standpoint that we're done at $1,750 gold, a very healthy NPV over 600 million and a 25% IRR. When we looked at the project, we did a very deep dive, very first principles look at it. We do see some potential adjustments which we think can enhance the economics. In that first column, that's the numbers that came out of the feasibility study last year, speaking to a $474 million US capex. We actually see the opportunity to trim that back a little bit. Key elements are, rather than beginning with construction of an open pit and underground mine simultaneously, we're going to delay the underground for a few years. So that allows us to pull out approximately $50 million of development costs up front. We're going to start with a slightly smaller plant as well, 3 million tons per year compared to 4, but we will bring it up to the 4 that was in the feasibility study at year 6. And then the other thing that we can see is being a bit different is taking the pit overall down by about 50 meters. That allows us to bring more material out of the pit compared to the underground. And overall, we're anticipating a higher production rate for the life of mine and a longer mine life. We're looking to put these numbers together in a 43-101 that we'd release to the market after the transaction closes. Speaking of the transaction mechanics, so as I mentioned, Orecorp is listed and domiciled in Australia. So we're acquiring the company via a scheme of arrangement in Australia, very similar to a plan of arrangement in Canada. This implies a shareholder vote following a circular and 2 court dates. What we've offered in terms of consideration is a mix of cash and shares, 15 cents Australian in cash, plus 0.0967 of a Silvercorp share. At the time of announcement, that was a 60-cent offer, represented a 31% premium to spot prices. As I said, it's a transaction subject to vote by shareholders, very similar again to a plan of arrangement. In this case, 75% over Orecorp shareholder votes. And what we do have is early indications of support from Orecorp's significant shareholders that they like the deal. And so we're excited about moving ahead, anticipating this will close in early December is the target. As part of the transaction, at the signing of the definitive agreement, we also made a private placement into Orecorp. And the key reason is this project is ready to go. From the plans that they had worked through and gotten approval in terms of the permitting and the community relations, there was the need to get going right away if we wanted to hit that time frame. So we put 28 million Australian in, roughly 15% of Orecorp, and they have already begun making the community relocation payments to move the current population off of the mine site so we can get ready. And once the deal closes, segue right away into earthworks and construction. Moving back to our own assets in China, so the Ying Mining District, we've drilled basically 1 million meters in 3 calendar years. We're continuing to drill again fairly aggressively this year, expected 270,000 meters of core. This is really following up on both a new discovery within the footprint of the mine. Obviously we're a silver, lead, zinc producer, but we've identified a structure containing copper and gold, and that's become a focus from an exploration standpoint. But we've also been looking at focusing this drilling on the traditional mineralization so that we can identify higher grade pockets, mineralization laterally along strike and even shallower to avoid going deeper in the mines and experiencing higher mining costs. This drilling will go into updated 43-101s for the operations that, with a cutoff date of the end of December, expected to put out updates early in the new year. And part of this ties into the fact that we've got an expansion program going on. We're currently building a 3rd tailings facility at Ying for $38 million, funded out of cash flow. And then we'll segue into building a mill expansion or a new mill number 3, 3,000 ton per day that we're expecting will cost $30 million to complete. As part of our growth strategy, we're also looking within the district around Ying. There's a number of other deposits, other operations. In late 2021, we acquired the Quanping satellite project. It's about 30 kilometers north of Ying, and we got a mining permit for that in December of 2022. There's a few other studies and permits to put together, as well as a mine plan, and we'd like to bootstrap that into production with the early ore being shipped down for treatment at Ying. The work that we've been putting into the assets is how we've gotten to where we are in terms of growth in production and growth in resource base. Starting at the top, you can see that on the left-hand side, we began operations with no proven and probable reserves, but that drilling and tunneling and exploration has allowed us to build an inventory where from the last 5 years, we've been running pretty stable here at approximately 115 million ounces in the proven and probable category. Measured and indicated, roughly 100 million on top of that, not included in the proven and probable. And based on the last reports, an inferred resource, 126 million ounces of silver on top of that. And we've done that basically replacing our production growing from a very modest sub 2 million ounces per year in the beginning to really now where we've been tracking between 6 and 6.5 the last 6 to 7 years. And you can see at the far right, we're forecasting to hit 7 million ounces of silver production in this current fiscal year, which will end next March. Quickly touching on the blue box on the first page that I showed you. This is the investment portfolio, and New Pacific is the largest and most significant. New Pacific began in Bolivia with the Silver Sand project. It was a raw sort of grassroots project with viewed to have great potential, acquired by New Pacific in 2017. Exploration, discovery, and resource drilling took place through 18-19, initial resource in 2020. That was updated in late 2022. Really, a plus 200 million ounce measured and indicated resource was identified. But the key catalyst here that came out early this year in January was the PEA, a 4 million ton per year open pit tank leach operation, producing 171 million ounces of silver over a 14-year mine life. But what's very exciting about Silver Sand is the grade profile in the first 4 years has this mine producing between 15 and 16 million ounces a year. So really we view this as the best undeveloped silver project in the world. And the economics shown there in terms of a 726 NPV and a 39% IRR speak to that. Project, given the PA, has now transitioned into the next phase where a PFS is in progress. But also importantly is the permitting and community relations. The project already has effectively a mining permit. To actually go ahead and build the mine, though, you need to have the environmental and the social side finalized. So the company's in the midst of negotiating community agreements to be able to access the land. The good news is that in Bolivia, the population is not philosophically opposed to mining, as in many other countries. In fact, most people in Bolivia are either directly or indirectly involved in mining in some way. So New Pacific is optimistic they'll be able to sign a deal here in short order and move on to the next stage, complete the PFS, look at project financing, and start to build this project. The other two projects that were added after entering the country, Silver Strike, I'll just mention the last one first. Very big concession package, a lot of work to be done. A couple early drill results showed a nice 200-meter thick oxide gold cap on top of potentially another deeper deposit. But there's a lot of work to be done here, and given the success at Carangas, New Pacific is focused on Carangas. Basically, the drilling that was first announced in 2022 ramped up 5 drill rigs, and that led to, a couple weeks ago, an initial resource estimate where you're looking at over 200 million ounces of silver in the indicated category, plus 1.6 million ounces of gold, plus lead, zinc, and copper, amounting to roughly 560 million ounces of silver equivalent in an indicated resource, plus an inferred. Given the lessons learned at Silver Sand, New Pacific is moving ahead quickly to commence and work on getting a PEA done on this project, which could definitely be a game changer for not just the company, but for the country. Oops, I'm going to back up here. Just to coming close to the end and wrapping up, the catalyst really, just to recap, as I've mentioned, looking at increased production forecast for this current fiscal year and growing beyond that. Ongoing drilling at the mines in China, which will add to the resource base, upgrade the reserves, and following up on those new discoveries that I mentioned. We've got those mine optimization programs in at Ying, looking to add that third tailings storage facility to ensure the future of the operation, and then upgrade the mill. Quanping satellite deposit, looking to advance that to construction status and have news for the market with a mine plan and cost estimates, hopefully later this year, early next year. BYP, waiting on that for a while, but we're optimistic that we'll get a permit that this could be reopened as a gold operation. There is a 500,000 ounce gold resource here, and once we get that permit, we'll determine the path forward. I touched briefly on New Pacific, a number of great catalysts that have recently happened, looking forward to supporting the company on the next set of catalysts. And really coming back to one of the key things we've been telling investors is that we've been looking to grow the company. The Orecorp transaction is our is our opportunity for growth, diversification. So the focus here for the next few months will be to work through the process to close that acquisition, and then going forward, continue to look at ways we can grow the company. I'll just finish up a quick snapshot in terms of the capital market side. On the left-hand side, top 10 institutional investors. You can see a mix of very familiar names in the ETF and sort of passively managed space, but also some traditional long-only investors, Europe, Canada. Analyst coverage, currently at 7 names, 6 in Canada and 1 in the US. And from a shareholder standpoint, the bulk of our shareholder base is retail investors and smaller high net worth and family offices that don't get picked up in the institutional category. Roughly 2/3 retail and 1/3 between institutions and insiders. And with that, I'll wrap up.
Thanks. Do we have time for Q&A?